from Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Well, hello. Welcome to the COB. I'm Nadine Blaney, and it is a pleasure, as always, to be here with you. I'm going to keep this short and sweet because I do have Mark Gardner from MPC Markets here with me in studio, and it's much more fun to listen to banter, I think, than me go on and on about the markets. But here you go. Down by about 0.5%. The COB Australia Index is closed at the COB point. Some trades still going through the S&P ASX 200, but I dare say it's going to be pretty much a mirror image of what we've seen here today. It just was a bit of profit taking. I mean, again, yesterday we were up above 8,500, although I had a chat with Tony Sycamore from IG today, and he said that it's sort of been a case of 2 steps forward, 1 step back for this local market. He reckons there's going to continue to be a grind higher toward the end of the year. So you can find that interview on ausbiz.com.au. I'll be chatting with Mark Gardner about that GDP read. I was just speed reading a CBA note from Gareth Aird, one of their senior economists there. It doesn't look like they've changed their forecast just yet. They're still calling for an interest rate cut coming from the RBA come February. But Gareth did point out that Michelle Bullock, the RBA governor, will have a chance to respond to the national accounts in the wake of the monetary policy state decision that comes through on Tuesday of next week. So pretty anemic growth coming through here for the third quarter. Backward looking read though. And that really put the Aussie dollar in the doldrums today. But again, we just continue to talk about US dollar ascendancy. And yeah, we'll chat Trump in just a moment as well. And him taking on the BRICS, what it could mean for us here in Oz. So with those interest rate expectations not changing in any significant way, it was the REITs that were the underperformers, and also because Goodman Group was down by a solid 3%. It's got a pretty heavy market weighting these days. And that was a block trade, we're told, that went through from a China corporation. We did have Center Group relatively flat, GPT down by about 2%. Here's a quick look at utilities. There's APA Group off by 1.6%. So utilities, I chatted with Jonathan Takadina from MPC Markets today on the trade. That's online as well. He was just saying that utilities, one of the worst performing sectors in 2024, and he's not going bottom feeding just yet. The banks, one of the best performers this year, as you all well know, giving a little bit back today, perhaps no big surprise. I'll run you through some corporate stories. So Rio Tinto signing a JV with Japan's SMM to develop the Winu copper gold project in WA. So SMM basically acquiring a 30% stake for $614 million. Tabcorp shares down. Gil, I just had a chat with Tom Waterhouse from Waterhouse VC. That's online as well shortly if you'd like to have a listen. So Tabcorp slashing 10% of its workforce to cut costs and simplifying the business. Tom just saying, what a tough job Gil has ahead of him to work through some of these B2C issues. He only invests in B2B in the gambling and wagering space. SG Fleet, PEP, well, it's going to be done and dusted on the ASX quite soon, but today share price bump up by 2.7%. Purchase price equates to a 1.4 billion enterprise value. I already mentioned Goodman Group and PME. We saw some founder selling, but they did say they won't be selling any further shares in the foreseeable future. We also had Bell Potter for one coming out today saying, whoops, we got it wrong, lifting their price target by about 100% to $260 for Pro Medicus, a hold. And I dare say that's because of the valuation. All right, let's get to it. Mark Gardner from MPC Markets joins me now. Hey, Mark.
Good afternoon.
Nice to see you. Sluggish for the GDP. The headlines are writing itself. Worst outside the pandemic. Not as bad as it's been since early 1990s recession territory. It's bad.
Yeah, look, and a lot of it was spurred by government spending as well. Household spending was flat, which is kind of against the retail sales numbers, but
but this is backward looking. But I thought it was interesting that you didn't see people going out and cash splashing the tax cuts. They've paid their mortgages,
they've tucked
and
away,
they've tucked it away. Aren't we smart?
Very sensible thing to do, and obviously, I don't see an RBA cut in the first quarter of next year. Not a chance in hell, to be brutally honest. And I really do think it'll be Q2 somewhere in there, and I think there's more of a slim chance that we miss the cycle. If Trump starts with the with the tariffs stuff, that is definitely short-term inflationary. So and we could get caught up in a little bit of piggy in the middle, being friends with China and the US as well. So that's not going to be good for us.
Yeah, well, I name dropped CBA earlier, and I read a note from them. Yeah, I do a lot of reading in a day.
Yeah.
They've readjusted their currency forecast significantly for 2025 for 60 US cents for the Aussie. Because of China, tariffs. Yes, commodity prices if China starts to stimulate, but just this US dollar strength story that we continue.
Yeah, I think that at the moment is just a little bit of afterglow from Trump. The US debt is an incredibly massive issue, and I would say overall that tariffs are not going to necessarily help over time, and I really don't. I think this US dollar strength is ridiculous as it stands at the moment. You had nearly 40 nations turn up to BRICS. Everyone's getting a little bit sick of the US running around like a punk kid with parents' credit card, and just basically expecting to never have to pay anything back. So I dare say that at some stage that'll come home to roost. I think once the new president is inaugurated, those credit agencies have got to be looking at those accounts and downgrading the US, which is just going to mean that
credit agencies can't downgrade the US when Donald Trump is threatening the BRICS nations with retribution if they even think about having another currency outside the dollar.
Well, that's the thing, is that they can do whatever they want. They're not under Donald Trump's control. So, look, if you go through what they import, and particularly, they're the world's biggest steel importer, essentially, and they don't produce any iron ore. We produce iron ore, and obviously here, we just got a chart with Fortescue there, but obviously our resources sector's been in the doldrums, and look, China's got stimulus filtering through. There could potentially be more. I think we've seen the worst of it. They're still going to need iron ore. Iron ore price there in the maroon is basically, that's a year chart. It's 10% higher than where the Fortescue price is. But basically the iron ore production in the world, we're number one, and the next 5 nations in a row are the BRICS nations.
Good chart, Mark.
So yeah, and US being the number one steel importer, basically Japan will be their only option. And he hasn't threatened anything against Japan as yet, but overall,
Give it time.
Give it time. He'll threaten most. He'll have everyone offended.
He'll be threatening
by the end,
me
so,
soon.
Yeah, probably. But but overall, I think it's a really good thing for our resources, because they're going to have to get them from somewhere, because the BRICS nations are, massive exporters of all sorts of things. From like Brazil's 80% of the world's sugar, and we know that Americans love sugar. So yeah, they aren't completely independent in many ways. Motor vehicles is one of their biggest imports as well, and Mexico and Canada are a big chunk of that as well. So, there's
so just by default, you've used Fortescue to illustrate that. Is Fortescue your pick of the Australian iron ore miners?
At the moment, I think it is. Diversified miner would be BHP, but yeah, I think iron ore, just on a pure iron ore basis. Copper is a little bit more diversified, Chile and Peru being 45% of the world, and he hasn't threatened those guys yet. So, but it's still very bullish copper. But yeah, BHP and Fortescue would be the 2 picks there at the moment.
What about BlueScope? Because BlueScope does have steel production in the United States. And if Donald Trump is looking to source goods from within the country, could it be a beneficiary?
It would have to be a beneficiary, basically. So, yeah, and China actually they've done a ban on the high-grade steel this morning, basically saying that any of the high-grade steel, particularly used in military, which I would assume would be ship hulls, submarines, etc., won't be exported to the US any longer as of today, basically. So I think it's very it's very big of him to talk tough, but the realities of it is that people are going to have to source these resources from somewhere.
Yeah, they've got to come from somewhere. That's just reality. Okay, so the beige, were you going to be up all night reading the Fed's beige book? Or?
No. It's appropriately named beige. I don't think it'd be. Powell, I think, is sort of mid.
So Powell is speaking, right?
Yeah, around about 3 or 4 a.m. I think. Everyone's been waiting for that, but really it's the jobs data towards the end of the week, or on Friday, sorry. And I think that now the election's out of the way, there is a chance that there could be readjustment in the numbers. So yeah, but and that could really take the gloss off, the patriotism or the Trump bump that's been happening over the last month and a bit, because nothing's changed for the economy, realistically, and Trump's not even in yet, and we all know that he only does about 1 in 10 things that he actually says he's going to do. So the market's getting hugely optimistic on nothing actually happening yet. So whether all of these changes go through or not, is yet to be seen, and that's not, we're still January the 20th away. So, a couple of the appointments have been quite good. A lot of them have been quite questionable. So, Trump 2.0 might be pretty similar to Trump 1.0, but possibly more dangerous because he can't get elected again. So.
Yeah. All right. Well, not unless he changes the rules. But we'll leave that there. When it comes to momentum, because I had a chat, like I said, with your colleague Jonathan Takadina from MPC Markets. How tense is the water cooler talk? He's happy to just roll with the momentum, until something changes. But you sound a little more circumspect to me.
But at the moment we're not fighting momentum. Absolutely, it's not remotely tense. I basically, this has been the best 2-year run in 20 years. It's been the best 2-year run for the S&P in more than 50 years, if in a hiking cycle, possibly ever. And we're very close to the best year in 20 odd years as well. So I think investors will get frustrated or slightly disappointed with even single-digit returns next year. As I say, all of this optimism, there's a lot of forward growth priced in, it'll really start to become a matter of whether they can actually justify those prices. So, but look, CBA is probably one of the best investor lessons of the year, is that you just can't fight momentum, basically. Everyone who's ever done sits on an economics desk or an equities analyst desk has been saying it's overpriced from about $130. I think that that flow of money, particularly with the extra super that's coming in now, particularly we're at 11.5% now this year. Its weighting grows, so then obviously the amount of money that's got to go into it grows. I think it's basically run out of sellers now because it's through reasonable valuations at record forward PE, at record PE. But what I think where it will probably to normalise will be, I don't think there'll be any institutional bids for probably about $30 to the downside. So I think what will happen, the reversal will be very, very sharp, and then things may go back to normal. So I think if we're going to get a rally in Australia, it's going to have to come from the resources, and because I think the banks have done more than enough of the heavy lifting. As the tech sector really this year as well. So
tech sector was the best performing sector this year.
And utilities, strangely enough, in the US have gone great this year. They're in a really strong uptrend, and we've been fighting the urge to try and bottom pick in that, as Jonathan said, because everywhere else in the world the utilities are rallying. So I think it's just probably a few stocks minor concentration, but. You've just got to roll with it until something happens. So.
Yeah. And we'll take away from this conversation a buy on Fortescue.
Yeah, pretty much, which is a little bit of bottom picking, but trailing stops are the best way to approach this market, because it could melt up another 4 or 5% over this Santa rally, particularly on thin volume. I think people will start to rethink in the new year. So if you just run trailing stops, which are just stop losses that trail up as the price goes up, that's the best way to approach this market at the moment, because trying to pick a top when valuations have basically been left out of the conversation for quite a while in many stocks, you just go with it until it turns around.
And I didn't mean tense water cooler talk, of course, Mark. I meant robust discussion, which we know you have at MPC and you're proud of it.
Oh, no, absolutely. But it's more, I'm always worried about the risks and things turning around, just having lived through about 4 black swan events. And there's just this, there is so many things that are reminding me of 2001 at the moment, and it's getting quite scary. But I remember at the time, people with the .com bubble, it went on for way longer than anyone thought. So as did the warning signs into the GFC as well. This can go, it can go for another 6 months and basically be unchecked. So
Party on.
We shall see.
All right, Mark Gardner, MPC Markets,
Thank
always
you.
good value. Thank you. And we mentioned that one of the companies we had our eyes on today was Pro Medicus. And with that in mind, oh my gosh, it's an MPC Markets Day. Kai Chen joined us. And Michael Wayne from Medallion Financial. Check it out.
If you go back over, say, a 5-year period, you'll see at one point it got up around $60 before dropping, all the way down to sort of the high 30s. So that was back in 2022, late 2021. And any sort of substantial pullback of 20-30%, we would start to look at it again, so long as the company operationally continues to deliver. And so far, they've ticked every box on that front.
The real opportunities when there is a slight correction in the price, if it goes down by 30%, then I think it's definitely worth a look at. A while back ago, that was on the wish list. We had a down period, and I said Pro Medicus was probably the top pick if it dropped another 20-30%, and from that point it's gone up about another 150%. So. It continues to defy gravity, but I think it would be wise to, if you've been in it for a long time, to take some profit.
There you go. You can always go to the AusBiz website and check out that full stock of the day analysis. It's just one of the drop-down menus at the top of the screen. And if you would like to get a stock straight to the expert of your choice, maybe you'd consider becoming an AusBiz supporter, becoming part of the AusBiz family, so to speak. Totally voluntary, but if you love what we do, we really appreciate your support. And a shout out to all of those supporters that have come through in the past few days. Really, really appreciate that you're willing to, just recognize that you find value in the information that we give you. So thank you. Leaders and laggards, it's that time of the day. Lynas up by 5%. So we've got a lot of talk about critical mineral restrictions coming through from China, and I can only think that that's what's helped propel Lynas today. Didn't see any news associated with Guzman & Gomez, but it's up by close to 5%. Webjet at 92 cents, or 4 cents higher, 4%. And Iluka Resources up by 3%, or 17 cents to end at $5.68. If you are interested in the laggards, Star Entertainment, Chalice Mining, Fletcher Building, Audinate, which is down by 4.8% to $8.13, and MinRes, one of the worst performers, down by 4.6%. In the small end of the market, Paradigm Biopharmaceuticals, I think it is, down by 17.17% to 58 cents. Orthocell doing well, also up by 17%. 40 Medical, part of our final AusBiz event of the year. This is in conjunction with our sister company, AusBiz Capital. I really want to introduce you to AusBiz Capital. It is a Investor Connect series, which allows you to ask the CEO's question. They tell you all about the company and strategy, and you can still register for that. ausbiz.co/capital. I think I will get that to you. We'll put it in the show notes. And Polymetal Resources up by 12.5%. On the flip side, though, we've got Ioneer down by close to 9%, Main Pharma off by 6%. So tonight, you heard Mark and I discussing it. We will hear from Federal Reserve Chair Jerome Powell. Will be interesting, obviously, on any timing of any potential further interest rate cut, and also how he anticipates the new administration might impact monetary policy. We get the precursor to the non-farm payroll report, the ADP jobs reports. That's from the private sector, which has been giving us good clues lately as to the non-farm picture, the ISM Services Index, and the Fed Beige Book. Here tomorrow, we get international goods trade balance. Of course, it comes in the wake of the GDP today, which did disappoint, but not enough to significantly change expectations for the timing of interest rate cuts here in Australia. So let's take a look at where we ended today. That, of course, is the CIBO Australia Index, off by 0.5%. And when we look toward the S&P ASX 200, it sort of tracked the CIBO, or vice versa, I should say, the other way around, throughout the day today. We had some pretty significant stock moves in the likes of Goodman Group coming through. The S&P ASX 200 down by 0.4%, 8,463 was the final figure. And I'm just looking at E-minis in the US, both the S&P 500 and the NASDAQ E-minis looking pretty positive. Bitcoin also up. We had pretty steady crude today, as well as gold. We'll bring you across everything you need to know from the overnight session. We're live from 9:45 tomorrow. We hope you can join us then.